Peace, guys. So I wanted to make this video and show y'all how I was able to make $1,100 trading gold by implementing fundamentals into this trade, okay? Because it's one thing for me to tell you that I'm a fundamental swing trader, but it's another thing to actually show you guys how to put the news and your technicals together where you can, potentially set yourself up to be on the right side of the market, okay? So I don't want you to think that you do this every single time you're always going to win. No, trading is a probability game. Sometimes you will be on the right side of the market and sometimes you're not. It's just part of the game. That's it. You're not always going to win every single trade. All right, so the first thing I did was during London session, I came on, TradingView, and I looked at, my pairs to see if there was anything going on, and I seen a trade on gold actually looking like forming, and I'm like, okay, this looks like it's gonna be a potential opportunity here to buy. So the next thing I did is I went on and I started to read some articles on it. So if you want to know how to do it, go to TradingView, and pretty much what you'll do is you'll go, I'll show you step by step in case some people don't know. So when you are on the home screen, right, all you have to do is type in the pair that you want to read about, right, and then it'll pop up for you, and then you'll come to news. So only thing that I pay attention to, I don't pay attention to nothing else. I pay attention to only this, right? So it'll show you a bunch of articles that relate to gold, right? And the one that stood out to me today during London session, as you can see, it came out 17 hours ago, was this right here: gold rises ahead of U.S. CPI report. So I went ahead and clicked on it, and the two things that stuck out to me, the two things that stuck out to me on this article was this, right? It was the annual CPI inflation is expected to ease from 3.3% to 3.1% in June, while the core CPI is anticipated to remain unchanged at 3.4%. And the other thing that stood out to me was this right here. Currently, markets are pricing in a 73% probability of the Fed reducing interest rates in September, with another cut expected in December. Okay, so since last year, they've been saying that the Fed was going to be doing rate cuts in 2024. We were supposed to get one in the first quarter. We didn't. We were supposed to get one in the second quarter, and we didn't. But they're saying that there's a 73% chance that we're going to get one in the third quarter, which is in September. Now, the reason why that stuck out to me so much was the fact that we see, if you go on my YouTube channel, I explain CPI, right? And I said in the video, CPI, a high CPI reading can be a negative or a positive thing. Positive because it shows that people within that economy have enough money to be able to spend and buy stuff that they need and want. It can be a negative thing because if the reading continues to come out month after month and it keeps rising, that can show that inflation is actually going up rather than going down. And in this case, in the U.S., they trying to get inflation back down to 2%, right? In 2022, which I also talk about this on my channel, in 2022, during the third quarter, if I'm not mistaken, inflation was at 9.1%. So they've been taking the necessary steps to get it from back down to the 2% level, okay? So being that they're saying that the CPI reading is actually going to come out lower than expected, it shows that inflation is actually dropping in the US, which is a great thing for us consumers, because when it's cheaper for us to buy stuff, we can buy a lot more. We can spend more of our money versus trying to figure out, oh, if I should buy this over this because it's too much, okay? So the fact that they're saying in this article that potentially the CPI report was going to come out low, I'm like, okay, a low CPI reading, low inflation. I'm not going to say that it's a negative thing for the U.S. economy, but it's less attractive for foreign investors. Foreign investors want to put their money into economies that's actually on the rise, like how they were doing during COVID, like how they were doing during 2021, 2022, when we seen the DXY go on this amazing, had a huge push to the upside because foreign investors were seeing the potential, and the Feds were doing rate hikes and inflation was actually rising, so they were dumping their money because they was getting more money back in return. So the fact that it's the opposite now, inflation is lowering, CPI reading is expected to come out lower. This shows, okay, boom, the US dollar is about to be stable. It's not going to be riding on a high and everybody want to get a piece of that high, right? So I took this information and then I went to the charts, right? So during this time, during London session, the market was like, it was this candle right here, and it was kind of like looking like it wants to push up, but not looking like it wants to push up. So what I did was to play it safe. I'm like, you know what? Instead of me market executing, I'm gonna just put a pending order. And if you don't know what a pending order is, I placed a buy stop. So I got it pulled up for you guys so I can show y'all. So a buy stop and a sell stop is pretty much, you will set a price on your trade, on your pair. You will type in a price that you want the market to go past or go below before it actually enters the trade for you automatically. So when you set these levels, if you set a buy stop, if you set your price here, as soon as the market goes above it, even if it's a little ass wick, it's going to put you in the trade. Same thing with a sell stop. You put it here, as soon as the market go past that price, it's going to put you in the trade. Now, buy limit and sell limit works the same way, but differently, right? So pretty much what that is like a retest. So if the market is here and if you want to get in here and the market is up here and you want to wait till the market comes back down and potentially retest this level and then get you on the trade because you think it's going to come back down to go back up, then you will set a buy limit or a sell limit. So those are the two things that you can actually put on your pairs if you don't want to get in on the trade right away. So that's what I did. I set a buy stop at this level right here. What you see is the gold. I set the buy stop. I just walked away from the charts. I'm like, okay, it's either going to do one or two things, right? If this reading does, like the article said, does come out lower than expected, then I have no, gold is going to go up. I know that for a fact because a weak dollar is good for gold. And when there's uncertainty going on in the world and foreign investors dump their money into gold, they dump their money into silver. So I'm like, all right, if this shit comes out low, then definitely gold. This is going to have a positive impact for gold. And drum roll, please. We had a negative reading. It came out low, like how the article was saying. Again, the article came out 17 hours ago. So I'm showing you guys that I prepared myself for it. And the reason why I felt comfortable walking away from this trade is because, number one, it's either going to hit my stop loss or my take profit, okay? I know how much I'm going to lose on this trade. I have no problem with it because I know how much I'm going to lose. So even if the market goes against me and it came out positive, I would have lost the trade. Oh, well, on to the next one. And number two, it's like, this is what trading is. You show up every single day trying to find the best high probability setup, and you get it for it, and then you just wait it out. So we got a negative reading for CPI, which shows that inflation is actually coming down in the U.S., and if we get another negative reading next month when when CPI drops again, it could also show, all right, yeah, inflation is definitely coming down because next month the reading could come out positive and inflation could start to go back up. We don't know. All I can do is take the data that I have now and apply it to my trading now, okay? So as you can see, if I go ahead and show you on my trade locker and show you my closed positions, I made $1,100 on this trade. Now, I know a lot of people like to talk about their wins all the time. I did take some losses. This week on gold, silver, and I took a loss on EJ. In this UJ trade, I got in and I got out. I'm like, why am I even getting in for this trade? And I'm happy I did because UJ went to hell. So I did take a loss on EJ, a $75 loss on EJ, which is totally fine. And then when it came to my gold and my silver trade that I got in on, I actually got in too early. As you can see, if I would have just waited it out like how I did during London session and actually read the articles and just wait, I wouldn't have took these losses. But it's okay. It's part of the game because as you can see, these 1, 2, 3, 4 losses got made back up by this one trade that I took on gold. So that's why I don't be tripping on my losses anymore. Okay, so I trust this video will help you. If you like what you see, follow, like, subscribe to my YouTube channel because I actually did break down fundamentals simply. And I do have more videos coming out on how to implement the fundamentals into your trading step by step so you know how to take the information and apply it to your trading, okay? So I'll see you guys in the next video. Peace.